All right, we got an interesting company here, a luxury paving company, at least as they state, based in Melbourne, Florida. You know how this runs, this first impression effectively. Asking 925 cash flow, they state a million, gross revenue 1.6, equipment a quarter million bucks worth. And I see right off the bat, I mean, this isn't listed by a broker, so I don't know whether it's a broker fault or maybe the seller listed this, but this is clearly very, very basically they're just lying. This is fraudulent. So cash flow is not 1.1. Cash flow is 405 right here. I don't know. Maybe this is gross profit. Maybe that's how they're looking at it, but that's very, very off. So 1.6 million revenue netting 405 gives us a better picture for the price, about two and some change times. 20 years in business, good reputation, 200,000 in the schedule in the pipeline. That seems relatively low for 1.6, unless these jobs are really tiny. Maybe they're like 2-week jobs, in which case $200,000 pipeline. Maybe this is just a week's worth of pipeline or a month worth of pipeline. That's not great to hear that there's no further business, but I mean, at least it's there. Inventory, $250,000 worth, always good. Thrived on word of mouth and repeat customers, no marketing. I know sellers and brokers tend to like to try and highlight this. This usually isn't a great sign as a buyer. Like, yes, it's juice to be squeezed, but it generally means when I'm stepping in with no potential data or understanding of how to advertise and effectively grow. Whereas if they're running some ads, even if very baseline, like $20 a day, and it gets them a job a month, at least we have data, at least we have a baseline, we know what's generally working, we can optimize on top. So this isn't a great thing to say, as much as it may sound great from the owner perspective. But 1.645 inventory and equipment's included. They, as they say, cutting edge equipment, whatever that means. Seller willing to let the buyer stay at the shop rent free for 5 months. That's not bad. That's a pretty nice little perk. It'll also depend whether the way they're looking at it is you get 5 months, then you're out. That's kind of a pain to have to move. Or potentially the rent might be quite high. This I wouldn't say is a red flag, but it's kind of an interesting little term. But it does mean, you really got to investigate what's the reason you're giving us 5 months. Is it because you want us kicked out after? Is it because the rent's crazy high and you're using this as a negotiating tactic on the rent? Who knows? Perfect for owner operator, or owner can be passive. Doesn't really tell us anything, unfortunately, but interesting they would mention it. No advertising for 15 years. Kind of like I said, it's not a great thing to hear, but it's not horrible, I guess. Equipment, 2021, that's good. 2012, low mileage, it's okay. I mean, we're definitely coming up on some stuff that needs to be replaced, right? 20 years, definitely over 20 years. These ones are probably okay. 162 miles, 149. Yeah, I mean, you're probably looking at, I don't know what F250s and F350s go for. I know these are probably expensive, but I'm sure we're looking at 200 grand plus in equipment that probably has to be replaced. And then some of this, I mean, this obviously there's foot out cost or a fit out cost for this as well. So, I mean, I'd say at least $200,000 in potential equipment that has to be replaced. Foreman, bilingual, around for 18 years. This is not a great sign. These ones are good. 2 years, 2 people, 10 years, not bad. This isn't a great sign because what this means is, in order to replace this person that's been there for 18 years, so they're probably in their 50s, maybe even older, you now have to find someone who's bilingual and has the skill set. So your hiring pool has just gone way, way down. That's kind of a pain, but it still is not horrible. These aren't like red flags. These are more yellow flags. The equipment for the price being paid is not a red flag. It's definitely something to be addressed though. 8 employees. Yeah, this is just a recap. Retirement, always good to see. It looks like this is listed potentially by the owner. I mean, usually brokers will have to put like timelines on support and all that. So this is very high chance that it's listed by the owner. I mean, if I hit phone number 321, that seems like it's a Florida area code, so this might be direct owner. Let's take a look at the numbers here. So 1.6, cash flow 405. I discounted 15%. I think that's reasonable. If it's listed by the owner, maybe they're already accounting for replacements and everything else. I would say there's a high chance they're not. Asking 925, 2.6 times, really not bad. With the amount of equipment, I've already accounted for it here in financing. So we're going to finance 200,000 in working capital to make that work just for replacement of equipment. Now you can lease this and whatever else. I'm just assuming it's part of the hard cost. Like no reason not to, right? We're looking at whether this is viable deal or not. So one other thing to mention here, SBA mandates have changed, right? SOP has changed where 5% has to come in via equity. That 5% can be in a bunch of different ways. I'm assuming in this new valuation structure that we do that an investor is going to come in. And so I'll show you what it looks like with an investor, without an investor, and obviously make your decision on whether this is a nice business or not. But so what we have here, seller finance, I'm just going to assume 50%. It's a pretty reasonable amount. It's not a crazy low amount. It's not a crazy high amount. It's right in the middle of the road. So $138,000 of the purchase price. And I mean, maybe you can get this price down. I would probably push more for having the seller leave some working capital, leave some, have a longer transition time, like some of those elements, because we know there's equipment costs that's coming up. We know there's a foreman that's going to have to be replaced at some point in the near future, like in the next 5 years, probably. I would rather have the backing of the seller and some of the seller's existing pipeline and cash than do a clean and clear and cut down the price by 150 grand, because we may or may not make it up if you don't get the good transition and everything else. So 15% seller finance, I think, will work for that. Total SBA loan, $1 million, and I'll break down what that includes in a second here. Interest rate, 10.25%. It's about where it's at right now on the high end. I always just like to assume the conservative. And so your annual debt payments on this business are $167,000. So what goes into this loan and how does that break down in terms of debt ratios? So $1 million total SBA loan, in addition to the 138, you're actually paying or financing 1.18 million to do this deal. Now, of that 1.18 million, 138,000 seller finance, that just goes directly towards purchase. Due diligence cost, roughly estimating about $37,000 between legal, accounting, vendor closing costs, whatever else. That might be slightly under reality, to be super honest, on a deal this size with the new structures and everything, but I would say it's probably about accurate. SBA guarantee fee, unfortunately, for pretty much every loan value up to under $1 million as well now, I think it starts at 150,000. You're gonna have to pay a guarantee fee. It is what it is. So 22 grand that goes out the door. And then working capital. So basically put this in as an earmark. Lender's going to give you 200 grand cash in the bank account day one, just for when equipment dies. Now, I would still expect and assume and want additional working capital from the seller, probably 1.5, 2 months worth at least, ideally 3 months worth. Which with these net numbers, we're probably talking maybe 100 grand, 150 grand worth of working capital. We don't have balance sheets, so I don't know, but roughly I'd say that's probably well in line. But with that said, cash injection here, like I said, is part of the new SBA mandate, just under 60 grand. I'm assuming an investor is going to come in. That's what this one means yes for investor. And so I'll show you what cash flows look like after paying back the investor on pretty standard structure, what we tend to see. So net cash flows to the buyer. If you did put your own cash in, debt service ratio 2.06 times, a little bit over a threshold we'd like to see, $176,000 cash as an operator. This business is small enough. This would only work if you're going to step in as an operator. This probably won't work cash flow wise, especially with an investor, if you're going to place an operator, because your net cash flow, the debt service ratio is not going to make sense. The lender's not going to okay it. Operator costs, I put 0, just assuming you're stepping in for whatever the owner currently does. Investor cost, this is on annual basis, $29,000 to basically get that investor cleared out over the next 4 years for the 60 grand that they've given you. Pretty typical structure for what we're seeing right now. it's kind of middle of the road. Some are a little bit more aggressive, some are a little bit less. Again, I like to just take something relatively close to conservative here. So that means your actual net cash flow after all said and done, $147,000 or 1.7 times debt service. So a couple different ways. Inevitably, where the working capital is really what hits here. So I'll show you what it looks like without working capital, and then I'll show you what it looks like without an investor, just so you get the sense. So in the case that we're just going to lease all the equipment you're going to buy, because it's all trucks, F-350, F-250, there you could inevitably lease or finance those through the bank. And so if that's the case, that's what you're going to do. You're sitting on a little more like $184,000 without the investor. And obviously, if you didn't have, with the investor, if you didn't have the investor, you're sitting more like 208,000. So nearly a 2.5 times debt service ratio, and you're kind of good to go there. So really not bad when all is said and done. So it's a good little business, very interesting little business. And because it likely looks like it's being sold by the seller, there's a good chance you might be able to ramp up the seller finance here and get this up to 20%, 30%. With new SBA mandate, you're probably going to have at least half of it at 30%, if not all of it, on full standby for 10 years, because that's what you want from the lenders, to have it act as equity. And so, if you get this ramped up to 30%, and now you're not paying almost $300,000 of debt service, show it here. It's a nice little chunk of cash that gets added to your plate here, an extra 30 grand a year or so, 25 grand a year. So not a bad little business, but by all means, if you have other businesses that you want to take a look at, go ahead and drop industries down below in the comments. I'm more than happy to take a look and see if I can find certain companies to break down. Or if you want to see more breakdowns, or if you want to see more regular breakdowns where we kind of just do high level cliff notes, go ahead and jump into the Facebook group. We post those every couple of days for just companies that we're seeing that we think are really interesting.